morning, traders. It's 8:02 a.m. on Thursday, the 3rd of December, 2015. Thanks for joining. Right now, ECB's Draghi is speaking on their televised or broadcast conference, so there may be pauses in the broadcast as I listen in here and there to manage positions. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The news front: France's Q3 ILO unemployment rate came in stronger, 10.6 versus 10.4. Mainland unemployment rate at 10.2 versus 10.0, or came in worse, I want to say. The unemployment rate's higher than expected. UK November PMI services came in strong at 55.9 versus 55.0, estimated 34th month of expansion. Saudi Arabia announced at 4 a.m. this morning to refute the press speculation of proposed cuts to its oil production. Initial claims this morning at 7:30 Central, about a half hour ago, came in at 269 in line, and continuing claims at 2.16, slightly better than 2.19 expected. The ECB announced at 6:45 Central, 7:45 Eastern this morning. ECB announced that it's cutting its deposit facility rate by 10 basis points to negative 0.3%. As expected, more measures to be announced later today, and he's announcing them now. ECB's Draghi came on at 7:30 Central and says the ECB measures have been effective on the inflation front. Says we're doing more because the approach works. ECB staff updates its projections for growth in the Eurozone, raises 2015 GDP outlook from 1.4 to 1.5, maintains 2016 at 1.7% for GDP, and raises 2017 GDP from 1.8 to 1.9. Inflation, it maintains inflation outlook for the balance of the year at 0.1%. It cuts inflation for 2016, and this is why they're extending their program. It cuts inflation for 2016 from 1.1% to 1.0%, and it cuts inflation into 2017 from 1.7 to 1.6%. The target for the ECB is just under 2%. ECB's Draghi to extend QE by 6 months to March 2017, could go further if necessary. The market's generally responding negatively on this announcement. You saw the euro jump up quite a bit, the dollar down quite a bit. You saw it on lack of guidance or movement in the asset purchase program. The market expected an expansion of the ECB's purchases, which it did not get. That's what I have for news this morning. There's quite a bit out there, and of course there are multiple sources for you to go look into. Looking at what's expected for today, we have ISM non-manufacturing 15 minutes after the open, expecting 56.5. We have factory orders at 9 o'clock Central, 10 Eastern. I'm sorry, U.S. Services PMI at 8:45, 9:45, expecting 56.5. At 9 o'clock Central, ISM non-manufacturing, expecting 58.0. Factory orders expecting 1.4. Durable goods, there's no estimate. And then we're getting EI and natural gas at 9:30 Central, 10:30 Eastern, expecting negative 36. As far as speakers, we have Fed's Mester currently speaking, of course, as I said, Draghi speaking. We're getting Fed's Yellen at a Congressional Joint Economic Committee. We want to listen in on that at 9 Central, 10 Eastern. And we're getting Fed's Fisher at 12:10 Central, 1:10 Eastern at a Financial Stability Conference. That's what's on deck for today. Let's look at the technical side of things. So So yesterday, what we got was somewhat of what was expected. We did move back. We did move back towards the point of control that we left behind the day before, and have pushed through it. This sell-off here, this push here was not anticipated. Actually, the expectation was for it to push through to the point of control, and because the prior day's balanced, for it to test the value area low, bounce around, retest, and then pop back up as it has been doing. That's what I was looking for on the primary hypothesis. What it did instead is it tested down, then up, and it just had a hard time yesterday holding on to the prior day's high, which was right there. It just wasn't able to maintain that high, and then sellers stepped in, and we had several impulsive moves throughout the day. The market, the profile shows a multi-distribution profile. It ended in a what looks like a trending day type profile. Note the size of the IB for yesterday versus the range that we did yesterday. Quite a bit. We multiplied the IB multiple times. This qualifies as a trending day. We have a lot of we have a big area here that remains unchecked, that needs that is likely to be retested, and we did retest it overnight. We ended up pushing to 20.95 and a quarter, and then we plummeted to push the prior day's low on the ECB announcement. We'll look at the overnight session. So yesterday's action was pretty much completely flight to safety type of action, risk averse players. A lot of money was taken off the table. A lot of risk was taken off the table coming into this morning. Yesterday, we saw quite a bit of volume come through on the sell side, but trading in an iceberg type of situation. I'll explain that if that doesn't make sense. How do you look at how do you see that? There's a webinar today at 10 Central, 11 Eastern on reading order flow and stalking trades. You'll see the link to register for that on the Twitter feed, twitter.com/FuturesTrader71. I'll go over how that looked, and explain how we can detect that and what we can do about it. Here's the overnight session. The overnight session looking pretty strong. We had a small bounce. We did have an impulsive move yesterday. We had the pullback, we had the continuation move, and then we got into a corrective move. Very classic action, very classic rotations there on the overnight session. Overall, the overnight had a pretty positively skewed session during the Asian session, and then it took off during the European session. And here it is, the announcement of what the ECB was doing was right there, and then the press conference is right here. The press conference has had almost a 20-point down range so far. So a lot of volatility there. You could see that the delta was very strong on that sell-off. In fact, the image of what the order flow looked like was pretty ugly, just dots all over the place. A lot of red dots, meaning strong sellers. Again, I'll go over that today during the 10 Central, 11 Eastern webinar. So where does that leave us? Let's take a quick peek at the macro products. The euro. So the euro's been in this sideways thing for quite some time. Let's clean this chart up. So here's the euro, just drifting down for quite some time. Has actually reached 105 and just popped up 4 cents. 4 cents this morning, 400 pips, quite a bit. So a 400 cent pop up on the ECB announcement. So there was a strong reaction there. As I said, the dollar got beat up. The U.S. Treasury selling off, U.S. 10-year. The Euro stocks also selling off. The Euro stocks have been in a sideways range for quite some time. You could see this balanced range as we await the ECB announcement. The market moved away from it and came right back into this 3430 MCV POC and has pushed through and below it down to 3340. So the Euro stocks are down quite a bit this morning. They're down 2%. The DAX is down 2.5%. That's a lot for those products. I think the market was definitely anticipating and had priced in that the ECB would be doing a lot more with the asset purchase program to help the market out. Dropping rates to a negative level isn't as effective as flooding the market with more money. Here's the Bund as well. The Bund just got hammered as well. Again, deeper negative rates, so the market's a little disjointed. As far as what we're doing for today, what's expected for today, so it was hard to anticipate and create hypotheses last night given the ECB announcement this morning. But overall, we're back in the lower distribution. We're back towards our point of control. This move down here does look somewhat complete. The problem with it, and I say that because it tested, pulled back, and made a lower low. So from an impulsive move, pullback, and continuation move perspective, it has completed its rotations. However, we do have the highest volume of the day at the low. We're up against the 2080 quarter MC point of control, or 2080-50 now, MC point of control, and we are in the lower distribution. So here's what I'm looking for today. The natural process here is for the market to respond back to 2078.50, test it, and then we'll find out if there are more sellers that are motivated to push this through, in which case we'd be going for the MC point, the HVN at 66.25 area and a 62.75 target below from where we are now, which is 2084. It's 20 points. But the more likely scenario is that we do get responsive very briefly, and the expectation is for it to push back up through this low volume node, this poorly auctioned area, and probably to this high volume node where we felt fairly comfortable over the last couple of days. So last couple of days we moved the point of control up, and then yesterday we moved the point of control down last minute. The point of control was up here pretty much all day, and it shifted down at the near the close. So I don't see this as a rotation down of value and then value dropping. I don't think that's a the expectation is not for that to continue. However, there's a lot of pressure from Europe on the sell side, so it's hard to tell what is likely to happen. But I'm looking for a responsive seller on the open. I'm looking for it to chop around. I'm looking for it to bounce, and then from there, who knows? We'll find out. As the market opens, I will go into a deeper analysis during the webinar, and we'll look for one or two, at least two trades. I'd like to take and manage two trades, although we only have an hour during that webinar to see which side I should stock, what the trade condition is. Is it a responsive trade? Is it an initiative trade with a bigger trend or impulse? Is it a scalp? Is it one that I want to put on and hold a strong hand in for the rest of the session? So we'll cover all that during today's webinar. So for now, the primary hypothesis is for this to get responsive, get down into yesterday's close and point of control, and then from there I'm looking for it to chop and then for it to find buyers and bounce back up. I'm looking for the market to get back into the scene of the crime before it takes its next rotation. Here's what's funny. So this is where we left off yesterday, and we ended up pushing to 2095. The scene of the crime for the announcement is right here. It's about 2092, 2093. Okay, the scene of the crime from yesterday on this rally up, because it rallied all night, is not news based, so it doesn't really. It would seem to me like this auction moving up was fairly legit. So to me, the scene of the crime really is up here. This is the magnet, and in fact, here it is. It's moving there already. I expect it to retest this 2093 during the session at some point. The SOC, or the scene of the crime, to be retested. It's unfortunately doing so early. The ideal situation is it doesn't do it early. It pushes down, then it takes care of it. But the market does what it does. It's opening in about 12 minutes, and it looks like it's working itself back to the scene of the crime up top. It looks like that trade is going away already. But in any case, like I said, I'm looking for that low volume area, this whole low volume area, to be checked and retested today, more so than for the market to drop off and continue selling. But we'll see. We'll see what sets up as the market opens. Again, I want to remind you today. We have that webinar at 10 a.m. Central, 11 Eastern. On your video on the screen, if you hit the YouTube symbol at the bottom right corner, or if you're watching this on YouTube, in the description I put the link to register in there as well for your convenience. I'll catch you at that webinar. Take care.